Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Welcome to Black and White Market Chatter on Life Planning 101, where we believe investing is black and white. We believe our number one goal is to keep clients invested by providing education, discipline, and support. We believe by removing that emotional gray area of investing, you may get the return you deserve. My name is Matt Ervin of Kennedy Financial Services. We are joined today by our lead strategist and portfolio manager, Aaron Kennedy, as well as our analyst from our investment team, Sam Barker. Today we're going to talk about Europe, debt and currency. There's a lot going on in Europe these days. And then we're going to talk a little bit about the broad-based market versus the equal weight indices. So Aaron, why don't you kick us off today?
Start off, I'm not really good with European politics, but there was something really interesting that's happening in France. The leader, there's a big election, and it looks like the right-wing parties are going to take over.
I've seen that too.
Well, the leader of France came out and thought he was going to get all tricky and called for a new election. And lo and behold, the left-wing parties kind of came into a little coalition. So they've bonded together. The right wing is strengthening, and it looks like the middle is going to be gone. So
goodness,
it did not work out. But this has a lot of consequences. If the left wing actually gets what they want, you know, we're looking at a lot more spending, a lot more socialistic government, and I don't know if France can handle that, and I don't know Europe as a whole can handle that. You know, we just got through that debt crisis when Greece kind of fell apart, and do you know what they've done to fix the problems?
What's that?
Nothing. Nothing, not a thing. So, I mean, they're not out of the woods by any means. We already saw them lower interest rates, so they're struggling from a little bit of economic standpoint, and now the bond markets in France are getting scary, and the currency should follow through. When Europe lowered interest rates, that made our U.S. dollar, our treasuries, or all that more attractive, so the dollar's already strengthening, and now all of this has happened. You know, so we need a break.
Yeah.
We need the dollar to weaken, but all these other countries are doing such a better job of doing the wrong thing. Yeah, it's kind of setting us back.
They're screwing up better than we are?
Yes.
Yeah, well, it's kind of interesting when you think about the division that you're illustrating. I mean, it seems like that's globalized now.
Yes.
Right? There used to be unity, one world. We all don't necessarily agree on every topic, but we're going to try to make this place better. And now it's such division. I mean, you're talking about some of the domestic politics, but then you travel overseas, and it's that much division.
You know, it's crazy, you know, having this big right-wing push. And don't think right-wing in Europe is anything like here.
No.
You know, it's still probably way left-leaning. Maybe like the left wing 10 years ago.
It's like the moderates. It's like our middle, right? It's they're moderate over there.
Yes. But you know what? You were talking about unity. This right wing push is everywhere.
Mm-hmm.
I mean, they're talking about it in Germany. They're talking about it in Great Britain. I saw something today that 18 to 24-year-olds are leaning that way, and that's only happened 2 times in history.
Right.
You know, so maybe there is unity out there of, hey, we want to be told the truth. We want to know what's going on, and we want what's best for me and my family long term.
Yeah.
So this could be unity.
Yeah, which is pretty cool. There's a lot going on in Africa too, and under the same regard, from political parties kind of forming and merging, and it's, to your point, it's exciting to see some younger generations get involved, because I think that there's a age band in America that says, Dad, Grandpa's going to handle that, or the kids will deal with that when they get old enough. But now the kids are getting to a point where they're diving right in.
Yes. Yeah. The thought of having something for free is really, really cool. But then when your dollar cheeseburger jumps up to $6, it's like, wait a minute.
Yeah, I think we talked about that, the Big Mac tripling in price.
Yes.
Yeah.
Right. Okay, let's get back to the point. Something else over there when it comes to currency and debt. Russia is struggling right now as well. The ruble, it's in trouble. There's a big run on Russian banks, and things are not looking good. The last time we saw this much softness in the ruble, there's a government change. So this has a lot of implications. Number one, what happens if we push Putin into the corner? That's the scariest thing for the world. But also, we have all these BRIC nations that are trading with one another. Mm-hmm. And me and Sam did a podcast the other day about China and the currency and all that. Who's owning rubles? Mm-hmm. So if we see a big drop, man, that's going to wipe out their balance sheet. And currencies are so powerful because you just think, if I'm trading apples with this other country across the table named Sam, and my currency drops 20%. Mm-hmm. The apples that I buy from Sam are now 25% more expensive than they were just a second ago. So now I don't have the money to feed my country, and things just start spiraling down.
And there can be a double whammy because my currency might be growing as the U.S. dollar has been.
Yes. So now all of a sudden, just think bigger picture. Now I can't trade with Sam anymore. And I can only trade with Matt. And Matt doesn't even like my currency, so he's going to request that I pay in gold. And then the system just freezes up and stops working.
But do you see like some sort of cryptocurrency, kind of that globalized money being a pro or a con for that? I mean, because each country has their currency and it works for them. And of course, when you start to trade, that's kind of what equalizes trade is currency hedging. But when you get to the globalization of that, they were talking about Argentina, where they would go use cryptocurrency because their loaf of bread was worth 14 times by lunchtime.
Yeah. Couldn't get away from work with your paycheck to go buy a loaf of bread because now you can't afford it all of a sudden.
That's right. I don't think we use cryptocurrency for that.
Okay.
If we say cryptocurrency, we're going to think about the central bank digital currency, where they can print as much as they want to. Mm-hmm. That doesn't solve any of the problems. If we have something like Bitcoin, then yes, that can be very powerful. Right. But we can't scale that much yet.
Well,
it's coming.
If we look at it from a larger standpoint, Aaron, you've sent me quite a few podcasts on cryptocurrency, and whenever you look back, used to people would trade furs, and they would use silver coins and gold flakes. And think about how hard it is. If nobody wants the fur that I'm trying to get rid of in exchange for apples, that's very difficult to do. Well, then they started using gold coins and precious metals as a form of exchange. And then, then they started using paper money backed by that gold. So it's just continuously been improving and going through the cycle. And at some point, we're extremely early on in the adoption of cryptocurrency. But at some point, everybody thinks right now that cryptocurrency is similar to back when the dollar was delinked from gold. Now it's just a piece of paper. It doesn't mean anything. But it's still used every day.
Yeah.
Well, cryptocurrency is similar in the same way, except on a global scale. So I don't know what the implications of that are whenever you're talking about rubles and China's balance sheet and all of those things. But it's just one step of progression on the currency scale.
It's preserving buying power.
It's preserving buying power. It is something that does not have borders. You would be able to use it anywhere. There is no confiscation of your money. The worst case scenario is you don't have electricity and can't get to it.
But even that goes beyond to the banks too. If the power grid shuts down, I can't get to my $1 bills that are locked in the vault, right? So I know what you're saying.
None of
If
that
your
matters.
internet goes down, then yes, you can't.
But other than that, it is the most free currency on the planet. There is nobody that controls it. There's nobody that can take it away from you at this point. So that part right there is that is so powerful. And a lot of people don't really realize that because how spoiled we are. But imagine being in Africa and you don't have access to ATMs, or you can't get money, or you're in South America and your currency is actually inflating away at 100% every couple of months. This is life-changing.
Well, even look at the cash apps, right? Because not many people carry cash anymore. But to be able to transact and say, hey, I want to buy your lawnmower and I'm going to Venmo you or Zelle or there's so many out there. But we've accepted that with open arms and some sort of, we always talk about Bitcoin because it's the most prominent, but we also talk about the fact that may not be the one. It's one that's currently out there, but there could be something behind it. I mean, there's some flaws and some pros to the way that was set up initially. So
and I think, yeah, you're exactly right. There might be something that comes back, and it's a computer program, so anybody can replicate it and have another one. But the most important thing is there's only one Bitcoin right now. And this was designed for us, the people. And when you say cryptocurrency or some of these other coins, it's not the same. And it's not even close. They don't have the protection. They don't have the limitation of units. They don't have the security. There's a big difference, and that's really the reason why the SEC looks at Bitcoin very differently than Ethereum or any of these other coins out there. So to your point earlier, yes, cryptocurrency will be used, but that's going to be more on the sovereign side. It'll be the United States of America or maybe the world coin. But for the people, for their assets to be safe, it'll be Bitcoin.
yeah.
Well, and one of the things that we haven't really spoke about, going back to how difficult it is to convert my fur into an apple so that I can eat.
You missed. We used to have conversations about seashells on a deserted island. So you missed all that. That was before your time.
Man, you got to go back and listen.
Yeah, hit the archives.
So if I'm
Samuel.
trading seashells, it's a lot harder to do than, it's hard to get a seashell to somebody in Japan. And not only that, it takes a lot more time. The banks are going to charge a fee. There's going to be leverage associated with it if you go through the banks because it's really a credit system. You send somebody $5. Well, if they want it instantly, there's going to have to be some credit somewhere if you're doing it through a bank, whether it's my bank or your bank. They're crediting.
Yes.
They're loaning somebody money for some period of time. Bitcoin does not loan money or loan coins. What they do is they lubricate the transaction process so that it happens faster, cleaner, with less leverage and more transparency. And so I think that's, there's one of the pros for it. However, the early adopters, I wouldn't even call them investors, but more speculators. So far, it's paid off. We'll see what happens.
I like how you said lubricate instead of less friction. Never heard it put that way.
Well, and I like how we've made this a Bitcoin podcast versus Europe and currency. But here we go. So, anyway, so let's wrap that up a little bit. And Aaron, you brought up a point about kind of what we're seeing on the news, the broad-based market indices versus the equal weight. There's still very specific places in the market driving. This week's been a good week, right?
It's been a fantastic week. If you're in the market, this is a great year, great 12 months. As long as you're in a very broad-based market, I think the NASDAQ was up 3.5% this week. That's great. S&P was up about half of that. And if we look at how healthy the market is, we like to go look at the equal weight. That was down 0.5%. 70% of the company stocks were negative for the week, but the NASDAQ's up 3.5%. It's insane. And we've already been seeing this. This is going on our second year. You've heard us complain, and I've been pulling all of my hair out and all of Sam's as well. But just this week, we had the NVIDIA. It's up 10%. You look at Broadcom, that's up over 20%.
Mm-hmm.
In 1 week, that is exactly half of what the NASDAQ did. 2 companies. So I don't know how much longer this can go on. And, if growth stays where it is, then it can go on forever, actually. But we've never experienced that in the past. The longer it goes, the more worrisome it becomes.
Well, and something interesting that Aaron and I were looking at on NVIDIA, whenever you look at earnings or whenever you look at the price to earnings ratio right before their earnings comes out, they're sitting at around a 70 PE. And then right after that, whenever earnings are announced and the earnings numbers are adjusted, the new price to earnings ratio jumps down to 50. And so we expect that, and I guess the market as well expects that the next earnings are going to be great again. And by the time the next earnings come out, the price to earnings ratio is going to be another 70.
Yeah.
So the growth is so fast, it's between earnings that the earnings are catching up. It's crazy.
Yeah, it's already bid up. Just from the multiple standpoint, the multiples, the stock's already up another 50% since the earnings adjustment.
Right.
This is crazy. So
I just had a thought. We talk about earnings in relation to companies, and we use it based on the fundamentals of typical companies, right? But when we talk about the growth of technology, disregarding companies, we talk about how fast technology multiplies. Is there some thought there that we need to look at technology companies and the rate for which they grow in a similar sense to the way technology grows and multiplies? Could that maybe, extrapolate some of the forecasting for the earnings?
I would say probably not. Correct me if I'm wrong. Technology, as it gets faster and faster, theoretically, I believe it also gets cheaper and cheaper, and that's one of the pros. So your revenues through competition should be not being cut in half, but maybe mitigated by the growth of technology. Am I right, Aaron?
Yeah, so technology is deflationary,
Yeah.
right?
technology in the past has been very, very deflationary.
Okay, but what if it's isolated to certain companies that are the only ones doing it?
Like NVIDIA?
Yeah, that's where we're headed right
Yeah.
now. This is the first time that I don't even know if this answers the question, but we're at a point right now that exponential technology is actually inflationary because we are constrained from using this new technology.
The demand is so high and you can't get enough of it?
Well, yes, but do we have enough servers up there to have an efficient AI system? That's no.
Right.
We need more electricity. So if we're going to push more AI, we need more electricity, which is going to push up electrical costs. We push up electrical costs, that means we're using more copper. So mister Copper is Mr. Economy. So if that goes up, everything's going up. Real estate for our data centers. We cannot use the things that are driving our economy, and prices have to go up. We have to put in all this infrastructure to get things to work correctly, and that's going to drive prices up.
Mm-hmm.
First time.
Yep. That's kind of an interesting thought. But so kind of steering back to kind of wrap up our conversation on equal weight versus broad base, is there any other areas of the market that you're seeing that are kind of getting teeth, might be opportunistic? What is it that you're seeing?
Everybody's looking at the market a very, very different way. Mm-hmm. And really reminds me of the late 90s where only safe place to be is in this exponential tech.
Okay.
So boring old companies that pay a dividend and do everything right are getting hammered. And those are getting to be some of the best investment environments out there, mm-hmm. but it's because they're not growing and everything else is. And if you remember back to 2000, 2001, 2002, the NASDAQ or the technology was dropping 30% a year, while great value companies that hadn't gone through that mm-hmm. were up double digits every year, and they were just catching up. So,
well, because to your big point, everything reverts back to the mean. at some point.
At some point,
So
yes.
so stay disciplined, stay on track.
Yeah, don't have all your eggs in one basket, and have everything built up to something to do well if we do have some kind of correction.
Yeah, well, that's good. That's good. Sam, do you have anything to add before we break today?
No, I think we've taken up enough of everybody's time.
Yeah. Hopefully it's provided value. Anyways, well, that's good. If nothing else, then we'll wrap up today's episode of Black and White Market Chatter on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.